All right, this is going to be a short video on a major advantage that individual investors have over institutional investors. And remember, there's a general presumption that the institutional side of the investment world has tremendous advantages over individual investors. I actually question that on some level, but there are certain specific areas where the institutional investor has a disadvantage, and we'll talk about some of these things in other videos. But the specific example I want to go over in this video is what I call reputational risk, or some people use the phrase reputational arbitrage. And so the way to think about this is, and it actually has to do with a famous quote from John Maynard Keynes, which is, the quote goes something like, "It is better to fail conventionally than to succeed unconventionally." Very powerful quote that you can unpack on a bunch of different levels. But specific to stocks, can go through, actually, well, let's go through an example in this video of, imagine Boeing as a stock that you maybe are considering buying Boeing during the worst of the COVID crisis. And remember, when COVID was at its worst, we hadn't yet had the government step in to do anything. Air traffic had stopped everywhere. Airlines were canceling orders for new jets. And there was it was very scary. And there was a lot of fear that most airlines would go out of business because their high fixed cost and their revenues were evaporating by the day. And of course, Boeing is also a high fixed cost company, and it was losing orders by the day and certainly not selling new jets. So there was actually some concern about Boeing actually making it. And that's why the stock went from something like the high $200 per share range to below $100 a share. And when times were at their worst, there was actually genuine concern that Boeing wouldn't make it. And of course, later, things played out in a much less severe way. But at the time, we didn't know that. So put yourself in the place of, say, a portfolio manager working for a mutual fund, or the aerospace analyst who covers Boeing working for a portfolio manager in a bureaucracy, in an investment company. And COVID is happening, and you're thinking, and this analyst is going to say, well, I could suggest Boeing because, maybe it doesn't go bankrupt, and maybe it makes it, and we might actually make a lot of money on this stock if COVID turns out to be less bad than expected. Well, if you're wrong about that, this would be one of these failing unconventionally type situations. So you make a couple of mistakes like that, and Boeing goes to zero, which it could have, and you're going to look like an idiot, and you're going to look like an idiot in your peer group, in your bureaucracy that you work for. And so that's what I mean by reputational risk. You actually can hurt your reputation or even destroy it. And if you make a couple of mistakes like these, you can lose your job. And you actually may never get work ever again on Wall Street. It's a small enough environment, and word gets around about mistakes like this. So there's a lot of pressure to fail conventionally and a lot of pressure to not succeed unconventionally. And this is what I mean by reputational risk. So you as an individual, remember, you don't have a portfolio manager looking at you. You're not working for your bureaucracy in the context of running your own money. You can't get fired from the job of running your own money. So you actually can take a risk like this. And then think of another aspect, which is, imagine you are already long Boeing and then COVID happens, right? So it's already on your sheets. You got a position in it, pretty big position. And all of a sudden, Boeing goes from $275 a share to $90 a share. And it looks like it's going straight to zero. So here's one of these other instances where you may actually have your reputation at risk if you hold it all through this, all the way down to, because it may go to zero. You don't know, right? And again, we didn't know later that COVID wouldn't be as severe. So you're actually going to basically, because of reputational risk, you will sell the Boeing off your sheets, even at the bottom, because of this concern that you might fail unconventionally. So what happens then is certain stocks, because of reputational risk or reputational arbitrage, they go to a price that is much lower than they really should go to. And that's your opportunity as an individual investor who doesn't care about your reputation, right? So you can take a nibble at Boeing in the 90s, and look, it would have paid off. Of course, you don't know that it's going to pay off, and so this is speculative, but you make that type of investment on a small scale, and you have the ability to take certain risks that no institution really would have the courage to take, or no individual working for an institution with the sort of reputational pressures that exist as an employee of that institution. So in the institutional side, they're not going to take a risk on something like that, whereas you just have to size it appropriately for your level of capital and for your risk tolerance. But these are the types of investments that individuals can make without the same kind of reputational risk. That's why they call it reputational arbitrage. So think of that as a lens to look at certain categories of investments, and think of it like a bucket of a type of investment that, admittedly, while speculative, might be able to produce some outsized returns for you as an individual. Okay? So, as always, thanks for watching.